Good morning, everyone. Darius Dale here to present our macro minute for Tuesday, April 5th, 2022. Starting with markets, we have stocks down this morning, commodities up, crypto up a little bit, dollar down, global bond yields up. Big movers, we have net gas up 3%, 10-year boon, gilt, and treasury yields all up in the 6 to 8 basis points range as a function of the increase in energy prices. Big news in that front, in that direction. The EU is planning to propose a mandatory phase out of coal imports from Russia in a direct response to them finding that Russian forces committed apparent war crimes in Ukraine. This piggybacks on what the U.S. Found a few weeks ago. The action on coal would be added to a package of steps aimed at strengthening measures and correcting loopholes that were already set to be debated by EU ambassadors this week. And then earlier yesterday or last night, the U.S. halted dollar debt payments from Russian government accounts at American financial institutions. Russia will now have to choose either between depleting the dollar reserves held at its own financial institutions, spending the new revenue it collects, or going into default. So clearly, the situation from a sanctions and geopolitical bifurcation perspective is actually getting a little bit worse at the margins. Not tremendously worse, but certainly a little bit worse. One thing that's been holding up asset markets here is the fact that we are about to head into earnings season, and the sort of geopolitical headwinds could actually take a big back seat to some of these company updates. There's sort of two camps here. There's the camp that we might get the guide downs looking ahead into the back end of the year. That'll be quite negative for risk. But we could also get the sort of corporate hopium talking up how robust and fantastic Q1 is, as we're about to discuss. Shifting gears to the macro front, the first batch of final March services PMI data from around the globe are reflective of the post Omicron bounce we discussed a few months back. That said, the general sequential improvement largely failed to arrest the trending deceleration observed in most countries' time series. As previously discussed in our research, the robust level of activity and the tepid pace of deceleration are contributing to significantly reduced cross asset volatility at the current juncture. We expect that dynamic to change for the worse by late Q2. So, on the accelerating front, we had Japan picking up, France, Germany, Eurozone, UK, no one unchanged yet. And in decelerating, Australia, Russia fell off a cliff, Spain, and Italy. Taking it to the chart this morning. What I'm showing on the x-axis is the level of the latest book services PMI reading. The y-axis is the trending rate of change. So 6-month moving average minus the 12-month moving average to show it in delta terms. And as you can see, we're all below the x-axis, which means, or not all, but most of the major economies are below the x-axis, which means you're trending lower in rate of change terms, but you're not really low from a levels perspective. I mean, we're kind of, most of these economies are, north of 55, which is an extremely robust level. I mean, you're probably trying to get to sort of some 52, or on the wrong side of 52, head into 50 is usually where you start to pick up some problems as it relates to slowing to a trend and below trend state of growth. So there's a lot of movement that needs to take place to the left side of this chart to get us there. Between now and then, we expect to start to get there by kind of late Q2, early part of Q3 in terms of observing that data. With respect to today's probable range setups, S&P 500 neutral VAMs minus 4.1% of downside versus 1.6% of upside. WTI neutral VAMs minus 11% of downside versus 14% of upside. Bloomberg Dollar Index bullish VAMs minus 0.5% of downside versus 1.5% of upside. 10-year Treasury yield bullish VAMs minus 23 basis points of downside versus 21 basis points of upside. Bitcoin neutral VAMs minus 9% of downside versus 5% of upside. Same thing with Ethereum neutral VAMs minus 14% of downside, closer to the upper bound of its probable range with 2% of upside. And then lastly, we have gold here, neutral VAMs minus 3% of downside versus 3% of upside. So with that, Darius Dale presenting our macro minute for Tuesday, April 5th, 2022. Later this afternoon, we have our April macro scouting report presentation published. 125 slides of the best content you're going to get on global Wall Street. Certainly seen worse research sold for significantly higher price points. So come check us out. Appreciate you.